Okay, so this should allow our attendees to join us. Good afternoon and welcome to our Treasury Management Innovation Lab. Today we will be talking about accelerating operations through data-driven excellence, and we have a great program ready for everybody today with two amazing guests. I'm Sarah Lennox. I'm the Chief Growth Officer for De Novo Treasury, and I will be moderating today's conversation. This webinar is being recorded, so if you have joined us live today, you'll also receive the recording to replay later on in an email after this. And of course, we hope that this will be conversational and engaging for you. So if you have any questions, please feel free to use the Q&A button right beside the chat at the top of your menu bar, and we'll have time at the end for questions and answers. Before I get into the agenda and some housekeeping items, I'm so thrilled to introduce our presenters today. Today we have Diane Sherman with De Novo Treasury and Caroline Cipriano with JJ Fortech. So if the both of you could just do some brief introductions and your backgrounds with your respective companies, that would be great.
Awesome.
Starting with you, go ahead, Diane, take it away.
All right, cool. Thanks, Sarah, and thanks for everyone who is attending. Diane Sherman, currently CFO and Managing Director with De Novo Treasury, joined over the last few months, left a career on Treasury and Liquidity Management for Bank of America Merrill Lynch in the futures product, and really focused on liquidity, and came aboard to help community banks and credit unions in this space. Excited to be here.
Thanks, Diane, and welcome, Caroline, if you want to give your background as well.
Yes, of course. So I'm Caroline Cipriano. I'm the co-founder and COO of JJ Fortech. I'm really happy to be here today. JJ Fortech is a technology company. So we supply small and medium-sized financial institutions with FedNow technology and also a liquidity management platform and the QR code. So I will be more than glad to be here with you two today talking about liquidity management.
Thank you. Thank you for being here. And also to put it out there, JJ Fortech is also a partner of De Novo Treasury. So Caroline, it's been an absolute thrill to work with you and your team this past year, and we have a great offering for our community financial institutions together. So anyway, just to get through.
Awesome. We are a proud partner.
We're proud to have you.
We're so glad to have you. Thank you for adding that in.
Yeah.
So our agenda today, like I mentioned, there will be time for Q&A at the end of the panel. But really what we're hoping to accomplish today is to talk about the data-centric mindset and how this mindset can transform operations inside financial institutions and enabling proactive risk management to fuel strategic growth. So we kind of wanted to open it up and start with what we felt might be a relatable problem for our community FIs. In today's market, we would challenge you, or we would ask you to think about the question, if you are making strategic decisions with yesterday's data, how good are you at incorporating as much real-time data as possible in your operations to look at ways of being strategic? And a problem that a lot of our financial institutions are hampered by is fragmented data and manual processes, which tends to lead them to being more reactive and inefficient in their operations. So I would like to start with Diane, if you wanted to speak to some of your experience in the industry, particularly around that switch from being reactive to proactive when it comes to data.
Yeah, sure. Thanks, Sarah. Yeah, I think going back on some of my experience over the years, it's always when there's a crunch for information that you think you have what you need at your fingertips and then realize that you're reacting rather than proactive. This was an instance for me in March of 2020 for a lot of us where, there was the COVID crisis. Obviously, the Fed was cutting rates down to zero, and questions around balance sheet liquidity and client behavior and, money's quickly leaving the banks at that time frame. Senior management was asking, can we see real time what our positions are in our bank accounts and what our clients are holding. So there was a lot of running around to pull this information together, and it really kind of raised the flag that data-centric mindset is something that we all need to be aware of. When you need the information, you want to be able to get it as quickly as possible. So that, I think, was a huge shift, at least in my space, to really think about the liquidity dashboards and the need to have like on desktop availability to see like your positions at any time. I can't stress that enough because we were on calls like till like late in the morning, like trying to figure out, what are we doing here and how quickly can we get the information?
Oh yeah, I can imagine. That was probably a very laborious process, especially in the very, very special month of March 2020, when the entire world was in a crunch. So yeah, those COVID era challenges on top of just the regular business challenge of the need to be data centric, whether or not you're in a crisis or a pandemic, that remains to be a priority for a lot of institutions and a lot of companies for that matter. So I was wondering, Caroline, if you wanted to chime in maybe from the perspective of your clients or even the perspective within your own organization, being a tech company, around that kind of mindset and the way that you use data to make strategic decisions.
Yeah, I think that Diane made really great points about it, and I think that it is important to start with the start, right? Like when we talk about liquidity management at the end of the day, what are we really talking about, right? We're talking about the planning for the use of cash that all banks have to do, right? And these needs include like customer withdrawals, loans, payments, like accounts payable. So if it's like salaries, operating expenses, you name it. So that's what the bank needs to actually plan for, right? And of course, like we're going to talk about that a little bit further down the road too, imagine so. But there's also the compliance side of it, right? So of course, there's a lot of things that the bank needs to be worried about when it comes uh, to liquidity management. And in the end of the day, you as a financial institution, you are trying to manage the opportunity cost of keeping cash on hand versus invested in like short-term assets or versus invested in like long-term assets. So how much cash to keep on hands for customer withdrawals and payments, right? So considering that is the issue that we are addressing here, it is always really important for you to do it through the most efficient way possible. And we know that when it comes to small and medium-sized financial institutions, when we're talking about community banks, when we're talking about regional banks, when we're talking about credit unions, sometimes, or the departments are too little, or when we start coming to like going to like medium-sized institutions, we're going to see a little bit more of like spread out activities. But when we're talking about these institutions, we know that lots of the processes are still manual, right? Like, so lots of still, when we talk about something as important as liquidity management, that also involves lots of different rails, right? We're talking about FedWire, FedNow, chips, like it all affects liquidity management inside of an FI. So even though it really ends up being a crucial and critical thing for the bank, unfortunately, or for the credit union, right? Unfortunately, we still see a lot of it being fragmented or still having manual processes to it. And as Diane uh, talked about her own experience, right? You only feel the pain of it when the problem comes, right?
Correct.
Like, so if you're not prepared for it, if you are only reactive, in the end of the day, when the problem comes, then everyone in the bank gets desperate of like, okay, we just realized we don't have enough money to cover this, and how are we going to do this? So that's why, yeah, managing data in a more efficient way, or actually knowing the data, because a big problem that banks are like have is also they don't really manage their data. They don't see their data. They don't even collect their data in a structured way. So, and an FI has a really like valuable data on their clients, right? And also on their own expenses and investments. So if you can, if a financial institution can utilize technology to actually use this data to its own favor, then we don't have to go through what Diane just described, the app maneuver, right? You and that's why. And then and Sarah mentioned, right, that we partnered with the Noble, and one of the reasons why is, as I mentioned um, when I introduced myself, is that we have a liquidity management platform, and one of the reasons why we developed it, it was because we would talk to FIs and we would hear these complaints of like, okay, we don't we don't have basically a centralized way to manage that, right? Like to actually like monitor our reserve accounts. So or even to a more efficient way to get money from our correspondent banks. So this is just one example, right? But it's one example of how you can actually like utilize technology in your favor to like not be reactive. So we know that there are many priorities, right? Like on the day to day. And at the end of the day, technology sometimes is just postponed because it sometimes it sounds like just an add-on, but actually the problems that you can avoid for having this add-on is a lot more of like a benefit than an actual add-on, right? So I think that Sarah, like on your question of like the problem, I think this is what we have been living, right?
Mhm.
Yeah, absolutely.
Yeah. And there's a competitive advantage as to Caroline's point, right? Spending the technology spend up front will have benefits down the road, right? And I think a lot of times the financial institutions, have to think, it may be a cost in the beginning, but the benefit will outweigh that as, as time goes on.
For sure. And I think that's actually the segue into our next slide, if you don't mind, Annette. I think we started kind of getting into the meat and potatoes of what the current landscape is. So, but please continue with your thought, Diane and Caroline, because we've been speaking to a lot of these points.
Yeah, sure. I mean, Caroline's spot on. I mean, a lot of it is the quality of the data and collecting the data, right? Going back to that time frame for me, there's a lot of times banks don't have like one source. There's multiple sources that varying information sits in, and to bring that all together, to decode it so that it's something that's digestible to the user is a process on its own, and being able to rely on the information, knowing it is the source, probably took some time for us, right? It was you knew the information was there, but it was, do we go to source A, do we go to source B? And as an institution, are we looking at the same source in the same way? Right. So this is like, I think, where it starts off with like knowing your data, right? And pulling it in and evaluating it and coding it properly, understanding what accounts need to be part of your dashboard when you're looking at your liquidity on a daily basis. So to me, I'd say it starts off with really understanding, that database.
And I'd like to add to that because of course, like when we talk about it, Diane mentioned like the cost of technology, but I I would even add to that, like calling it an investment, right? And it really brought to my mind like another a really relevant story for this. There's a great friend of mine that he launched a company that a technology company that was focused on optimizing the processes of FIs, right? Bringing efficiency. And he first when he first got to like started like working with these, actually we know here we're talking like specifically about treasury management, liquidity management, but this really shows, the story really shows of how an FI actually does not utilize or even like know the data that they actually have. Because the moment he started working with these FIs, they wouldn't even know how many account holders they actually had, or they wouldn't even know how many accounts were active or not. And that's the core of a bank, right? Like that's the core
Mhm.
of a bank. So that is the level of lacking data and like control on data. Imagine like the cost also of you keeping like accounts open, considering that they haven't been used, right, in so long, or even like the chance of actually like reaching out directly to these clients and having them back, right? Okay, if you open an account with us and you're not banking with us anymore, like what happened to you, right? So trying to like use that data to bring the client back. And here, like under the examples that under like the what our subject today, you can also utilize that data to offer loans, right? So also on the treasury management side. So and on like, since now we are like talking about the current landscape, if you have a hard time as an FI to manage liquidity with like the rails, how they are currently used, right? Like, so I mean, the most common rails today, like for example, checks, which are like the typical cutoff time like varies, or like Fedwire that goes until like 7 p.m., or like ACH that runs in like multiple batches of like 10, 10:30 a.m., I think, like 1:45, like 6 p.m. So like all these rails that currently already utilized with the majority of the financial institutions, even like chips, um, that is final by 6 p.m. Like imagine how would you manage if you were to add real-time payments, right? Because we know that real-time payments are already a reality. Like our RTP has been out there for like 7 years and has been driving most of the volume. But FedNow was launched in 2023 and already has 1,500 participants. So real-time payments recently has been a way uh, of of FIs to have a competitive differentiation, right? Like a differential when it comes to real offering. And then going back to liquidity management or real-time payments definitely makes liquidity management harder, right? Because I mentioned all the cutoff times for all the other rails. When it comes for real-time payments, we're talking about 24/7, right? So you have to manage liquidity 24/7. And for FedNow, that liquidity will be managed through reserve accounts, right? Like actually with RTP, you have to manage through your joint account with the New York Fed, right? So you have multiple accounts that you have to manage. On top of that, of course, there's also like the layer of your correspondent bank if you utilize one. So all this is what we're talking about, like like the current reality, right, of financial institutions when it comes to like managing their rails. So yeah, so just
Yeah,
adding to
no,
that.
no, that's great, Caroline, because and that comes with a potential opportunity cost if it's not managed properly, to her point, right? Because now the bank doesn't want to have cash sitting idle and or accounts that are not fully funded. So you have to have that dashboard or that real-time view so you know that you're optimizing your cash funding at all times. So 100% agree.
So what I'm hearing out of this is real-time payments require real-time data.
Real time, yes.
That's part of,
Definitely.
yeah,
Yeah.
not even just this industry,
Yeah.
since I'm new to the banking industry, the past several years of my corporate career, I think a lot of industries are kind of pushing for this too. I can't tell you how many times in my previous organization did I hear on town halls and the larger company broadcasts talking about single sources of truth. So, and I believe what they were getting at is real time or as close to as real time data where we can and as much as possible so that we're getting accurate depictions of what our business reality is and what our customers' realities are. But thank you for that anecdote. That was a really good way to set the scene, Caroline. And I think that's also another great segue into when we move into talking about what we're calling the data-centric mindset and its benefit. So kind of moving beyond getting your technology right, getting your data compiled and structured in the right way. Now you have another case for change, and that's the organizational case for change. So once you've kind of solved some of those how we're going to do it issues when it comes to your tech stack, now you have to deal with your people, right? So
Right.
moving beyond simply just collecting the data and then building the cohesive framework where that data will inform your strategic decision making, it also has to deliver the why. Why are you doing this as an organization? What
Mhm.
kinds of decisions are you going to be able to make faster? How is leadership going to anticipate and then act on market trends with this newer, faster data source? And then things I think you mentioned, risk management, that's going to be another major theme for today too, but proactive risk management. And then the efficiency gains that you get as an operation from the operational perspective. So, oh, and I think I missed fueling innovation. So developing new products to respond to customer needs too is another big why and the key benefits of moving toward an organization that is both tech ready and people ready when it comes to data. So Diane, because of your previous experience and the story that you were telling when you were at Bank of America Merrill Lynch and the endeavor that your organization had in 2020, could you talk a little bit more about what that took when you're dealing with these initiatives, right? So the case for change and operating in a cross-functional environment where you have to get a whole bunch of different key players involved and your stakeholders, right? All of your stakeholders aligned to move toward this goal.
Yeah, sure. I mean, definitely, I think it starts with leadership. Number one, you have to have, I mean, I think transformation starts at the top. So you have to have the buy-in from your senior leaders, be it the CFO, the head of your business. There has to be that driver of like action at the top. And once you have their buy-in, they'll champion for that shift in the people mindset. And you kind of start to see everyone move towards that new way of thinking. It takes some time. You have to invest in, buying into new initiatives, new training potentially around how to use the new analytics, right? A lot of folks are comfortable with what they know, and moving onto a new platform can sometimes be scary, and especially when you're very used to how you do your day-to-day job, and now it's another way to look at it. But it's definitely going to fuel a few things, right? Decisions will be made quicker, potentially with better data, right? You'll get to see your client behavior more in terms of like deposits, what's sticky, what's not sticky, who's driving moves on a daily basis. It helps your sales teams when they're looking to reach out to clients to see what products they might need, what might be driving their cash flow behavior. So I think a lot of it comes from getting buy-in from the top, but then also giving the folks on the ground a chance to really get comfortable with the new system and the efficiencies that it does provide, right? It can cut a lot of time off of someone's day to have something at their fingertips and a dashboard real time rather than digging through emails or calling people to find out status of events, which a lot of times we do. And it is a cross-functional conversation because most of us talk with our operations teams, legal, risk management, compliance on a daily basis, especially around liquidity, and especially when it's in a stressful environment.
Yeah, that makes a lot of sense. Caroline, did you have any thoughts to add to or your own experiences to share when it comes to getting people to kind of align and adopt a data-centric mindset or work through larger cross-functional initiatives that might look like that of community financial institutions?
Yes, definitely. So I think that Diane covered already most of it, but what I'd add to that is we know that like the decision making process in an FI can take long, right? Like it can be it's hard for any changes to be made in like less than 6 months, right? Because there are many approvals that any change needs to go through before anything is implemented in an FI. In part because, of course, like we know that there's like lots of regulation, right? There's lots of requirements and risks involved into like changes. We know that that is a reality. So regardless the reason, we know that changes take a while to be implemented inside an FI. And we know that they're not going to happen if the management doesn't really approve the change, right? But what is really important, and I'd say like the what I would recommend to like management is to keep themselves informed, right? And like go to payment forums, right? And like banking forums and see what's new out there, right? Like be informed by the technology that is out there and how it can bring efficiency to the organization, right? And how that can make life easier inside of a bank or a credit union. So, but changes don't only come from management, right? And I think Diane touched upon that a little bit. We know how technology can affect all departments, right? Like sales, operation, and not only and usually not the person that actually will sign the paper in the end of the day, right? So also as an organization, it's always important for all of us, especially in like smaller organizations, to bring also the change internally, right? Like so, yeah, like of course, like everyone that is today in this forum, it's like following up with new trends to also bring internally into the organization what you're all seeing out there, right, in the industry, how technology can be applied to make your day-to-day easier and faster. And um, funny enough, also, in lots of forums that I go to, I also hear some of the operators inside of financial institutions worried about uh, uh, the future of technology, right? Like, so, for example, artificial intelligence, and lots of people that work inside of FI are worried about like being replaced, right? Losing their jobs for AI. And actually, AI can optimize your job, and you can have another job that is a lot less manual. And this is what we're talking about here, right? Like we're talking about being less manual and more automated, so you can actually focus in other tasks and you can actually help the FI grow. So, before, like when we're talking about liquidity management, right? When we talk about like basically the the evolution of spreadsheets to automation, like but we when we talk about spreadsheets, we're talking about like manual data entries, right? Like time consuming forecasts, like manual tracking of liquidity. But now we see a reality. There are lots of tools out there that you can actually have automated like data integration, like with real-time analytics and intelligent decision making, right? So this comes that there are the tools are out there, right? Like I meant, of course, like I have mentioned CJ Protect's tool, right? So we offer real-time analytics, and we have that integration, but we're not the only tool out there, right? There are many tools out there. So it is thus the change will only come to the organization if everyone in the organization helps push the change, right? So of course, like the organizational culture and the data center uh, mindset is really important to like push the change, right? So that's what I'd add to that.
Yeah, thank you for that. Those are some good insights. And so it kind of brings us to the next part and somewhat back to the liquidity focus of this. And we're going to start with talking about something that I've heard Diane speak about numerous occasions now and absolutely light up anytime we get to the topic, but that is optimizing balance sheets. And then some things like the risk management that I mentioned before, also ensuring compliance too. So there's a compliance play on that as well. And then Diane, you wanted to talk about the balance sheet component and then ways that you can improve profitability. using real-time data integration.
Yeah, sure. Thanks, Sarah. No, I think without real time, it's almost like, if I could think of it, it's like almost like driving your car through the rearview mirror, right? Because you're looking at the past in a way, or you're not looking what's ahead of you. And I think real time kind of gives the users, and again, from operations all the way to the front office to the finance teams, the ability to predict, right? Kind of forecast where you think things are going to end up during the day, 2 or 3 months out, based upon trends that your data might provide you. Give you a sense of what would happen if, interest rates went up or down. Could there be a, loss of core deposits versus non-core deposits? I really see it as, the ability to save a client base sometimes is really being able to tell your client what you foresee happening in the future, and help them plan also for their strategic cash flow on their end as well. So I think in terms of like profitability, that just kind of ends up putting you in a place where you're well positioned to provide client with the best pricing alternatives. Also, as an institution, understand your options to optimize the deposits yourself as well, with other counterparts, and know what is going on in the market real time is essential to be able to do that. Now, I think even like the CFO's role is different, right? CFOs pretty much kind of provide the finances after the P&L has already occurred. Now it's more like being able to strategize and say, well, this is where we think we're going to be, today or tomorrow, versus this is where we were yesterday. So it kind of trickles down to how reporting is actually done as well. Everything becomes strategic rather than reactive.
And Caroline, if you had any other thoughts that you wanted to add to that before we move on to our next section.
Yeah. So here, like the first, like one thing that really called my attention, because I had mentioned it before, is the insured compliance side. I can't reiterate enough of how liquidity management is important also for compliance purposes, right? So we know that financial institutions should ensure compliance with regulatory standards like Basel III or FDIC guidelines, right? And having like utilizing tools to ensure that is critical. All FIs have to comply with that. And then and also like on the side of optimize balance sheet or improving profitability. I know that I mentioned before, right, the new like the trend of um real-time payments, right? Like real-time payments being like having like grown, and we expect it to grow a lot more, right? Because we're seeing like a growth in number of participants, but we still want to see a growth in volume. It is really like now, when you implement, for example, real-time payment tools, and you implement liquidity management tools, it really opens up a new potential of clients also, considering that there are other use cases for real-time payments that you weren't addressing before, right? So the whole thing with RTP and FedNow are because they cover for real-time payments not only person-to-person transactions, right? So paying for utility, right? Like loan disbursements, like even earnest deposits, right? Like on like for title companies. So there's this whole other segment that maybe you're not addressing in your financial institution that opens up the potential and the possibility when you open this line of service. And of course, like with the implementation of real time payments, you have to increase your controls in with the liquidity management. So, for example, if you were to implement RTP instead of for now, you got to make sure you are going to pre-fund your settlement account, right? And also when it comes to liquidity forecasting, treasury teams like estimate weekend transaction volumes, right? Like based on historical data. So that is something that you could implement and using tools out there. So we are also like in our tool, we're implementing an AI module that will forecast like the movement of the changes in the balance of the to help monitor and forecast right the balance of the reserve accounts. So these are the kind of tools that you can also use for liquidity forecasting. And and also implementation of alerts for that monitoring. So this is one example, right? Like real-time payments is one example of how that could increase profitability. But at the same time, like I've mentioned it before, another way is by actually monitoring liquidity better, you can maybe offer more loans for your client base than you were doing before. That is another example of how you could increase profitability. And also reduce losses, right? So if you can manage closer your balance, you can maybe have less cash in the account, right, and have more invested, which of course will also increase the returns of the financial institution. So there are many possibilities of how you can actually utilize that data to improve profitability and ensure compliance. So that's what I'd add to this.
Yeah, that's a great insight and not one that I would have necessarily just as a novice in this industry. And the more that I learn about banking, and now that we have our newer line of business that Diane oversees for liquidity management consulting. So I've been getting myself personally caught up to speed on cash flow and liquidity management for financial institutions. And it's really eye-opening to see how just that one thing can help improve the profitability of the institution, not just from like the operational lens, because when I was first getting started, that's kind of how I understood everything to be. But everything that you just described and the way that it can be used to do things like more loans and investments for the bank to increase that bottom line is very interesting to me. So thank you both for elucidating on that. And here we are again, the same theme, profitability and innovation. So Diane, if you wanted to add or pick up where Caroline had left off, it's a really great segue into the slide that we're calling the engine, and that's the innovation and the profitability piece.
Yeah, sure. In terms of when I think of the engine, right, I think it is having the ability to, like Caroline mentioned, right, look at the flow and where is it coming from? And the profitability could mean that there are opportunities that the data is actually telling you that you're missing. Data says a lot. Right. And I think that the data sometimes tells the story of, hey, you know what, we're not even touching this client segment, or we should be using our cash a little bit more, in this way than not, right? We need to offer a new product line. So I think that the profitability will start to kind of find itself as you dig into the data and you see where you can maybe do a little, better and or maybe less of, right? It's really digging in and taking a look because the answers are there. It's just having the ability to see it.
Yeah, I love that. That makes a lot of sense. Like you said, identifying those potential cross-selling opportunities when you're looking at your current customers and what they're using, what they're actually buying, having that kind of like right there in front of your face, I would have to imagine would help your sales teams tremendously figure out what some of those things are that would benefit and bring a lot of value to them, but also bring in more fee income, especially in treasury management for your business or commercial clients. And then Caroline, I know that when we were prepping for this, we were talking a little bit about the way that risk management plays into this profitability side. Did you want to add or share any thoughts around that?
Yeah, so on the risk management side, definitely having good tools out there to generate, for example, reports really helps with risk management. With all like the so of course, you know that inside of your financial institution, you're going to have your control departments, right? So you have compliance area, the risk management area, the internal controls. You have probably internal and external auditing. For small institutions, of course, like auditing always has to be independent. But for the other control departments, we know that for smaller entities, some of these departments end up merging. But it all in the end of the day um, ends up on risk management, right? Risks need to be well mapped and well assessed, right? Like uh, so they are mitigated. And the best way for you to mitigate risk is knowing really clearly what your risks are. And one of really great way to know how your risks are is by having clear data. So data definitely helps with the generation of reports for auditing and control. So that is a really, really strong tool for these control departments. So that's what I'd say about like the risk management side of it. But on the innovation side of it, I have talked like longly already about like cross-sell opportunities and like raising profitability and like opening up to new clientele that you weren't accessing before, or offering products that you did not before, by having more access to data and managing liquidity better. But also there are many ways out there to innovate, right? So for example, like so we see like new trends of also new solutions that are out there, right? So like autonomous treasury systems of like AI powered platforms, right? That can self-adjust the liquidity positions in real time. Well, we see that, you know, like actually implemented by FIs in the future, you know, that is another way of innovating, or like continuous forecasting, right? I mentioned our AI tool, but so it's like driven by AI and machine learning, like adapting instantly to like market changes. So smart liquidity routing, like automatically like choosing the optimal payment path. So we know that there are payment hubs already that have like payment orchestration and that have that optimization, right? So this smart liquidity routing um, could help with also like automatically choosing maybe FX rates, right? And helping then with available liquidity, or maybe like integrated digital ecosystem. So like unified dashboards, as we spoke earlier too, like the importance of having like a unified dashboard where you can access data, but maybe like pulling live data from like banks, ERPs, and markets, right, all in one place. And also having maybe like dealing with digital currencies, right, and tokenized liquidity. So we know that there are lots of central banks that are like talking about having central bank digital currencies. I don't think we're going to see that in the U.S. anytime soon or ever, but that is another
That's another in de
liquidity
novo.
tool.
That's
Yeah.
another conversation.
Yeah, definitely. But also like on the digital currencies and tokenized liquidity, there are stable coins. There is tokenized cash that could redefine how like cash is held and liquidity is managed and maintained. So that is the future, right? Like that's what we see out there of like potential innovations, like on the liquidity space. But we have, I think there's still like there are simpler things, right, that FI can implement in-house to already start utilizing that data and kind of like organizing the house, right? Like getting the house tidy to be able to increase efficiency, right?
Completely agree. Yeah.
I think we're probably going to have to schedule another session just to talk about things like stablecoin and and other things I'm
Yes.
hearing about, blockchain, all of the things that I know Diane gets very excited about.
I love
So
that
getting to
stuff,
receive
so
more to
yes.
come soon. All right, and then if
No,
we
and
could just
and
move on to the next slide. Oh, go ahead.
yeah, sorry, Sarah, just on the innovation side, I think that I
Yeah.
would also like, since I talked about like really like big things, right? Like big changes, going to like the simplest possible, like not, that's not the simplest possible. There's simpler stuff,
Simpler.
right? But like a simple innovation that could be implemented that could really help on the day-to-day. For example, it's utilizing liquidity management transfers. So that is a message that is part of Fed now, right? And RTP also has its message for loans between FIs. So with like one message, right? Like banks can also banks or credit unions can also utilize transfers instantly between FIs to help them manage liquidity. So before, like we would only have Fedwire, right, for that. But now there's this tool out there like 24/7. Actually, like LMTs have special hours, right? But it works over the weekend. So at these times that you don't have Fedwire, you can instantly transfer money currently, right, between FIs. So that is a form of innovation that can be implemented in-house. It's not that complicated and it's already out there. It's not like a new, brand new like breakthrough solution. Like that now has been out there since 2023. So these are ways for you to actually like improve liquidity in-house, right? Like with not too much complication, right?
Right, not a huge cross-functional initiative, a
Mhm.
low-hanging fruit that might make
Right.
a huge difference at the end of the day. So I love that example. Thank you for sharing that. And this is a little bit another slide that comes back to what Diane was saying toward the beginning when we started, and that was talking about the leadership mandate and how leaders can really influence these kinds of projects. So whether it's something small like the change that you just mentioned that is a low lift but makes a huge difference,
Mhm.
or if you're going to look at something where it may require a larger cross-functional project, it may require bringing in a new vendor. You might have to evaluate whether or not you have to build it yourself, buy it, or partner. Diane, would you like to kind of speak to what some of those different scenarios could look like and the importance of leadership and stakeholders being involved?
Yeah, sure. I think, at least in my experience, most of the time it's the front line who knows the pain points, right? So I would just suggest be willing to have that conversation because a lot of times senior management may not even realize how painful a process is. They just see the end result. So, I think it is a bit not only on leaders, but on the front line to say, hey, raise your hand, go into the office, set up the meeting, and let someone know that there is a pain point that's taking too much time or it's causing, manual intervention and there's errors happening and lots of time put into it. So I think, first, like kind of be brave enough to have that conversation because it could make a big difference, especially when senior management is prioritizing where they're going to spend budget and put money towards innovation and projects. And then have a bit of a case behind of like what the benefit of doing this would mean to the leadership team. And then once you have the leadership buy-in, I mean, I think at that point, going back to Caroline's point, maybe just start with baby steps. And to her point, there are things that you can do today that would be low hanging fruit and not create, a year project behind it, right? Maybe you prioritize those things first and then, start looking at your data in batches. Don't have to like jump into it all at one time. And maybe you pick, a certain batch of data that you want to look at and really like look at core transactions in that batch and see how you could potentially automate something around it to make maybe that one process faster or quicker to provide more insight on liquidity. I think sometimes we try to boil the ocean and you can actually like, phase this out into different, into different phases to actually implement.
Yeah, for sure. And I'm sure that everyone on the call has at least experience once in their career a boil the ocean type of scenario, and we all know how that goes. So that's a really great point and some really great examples of ways that you can at least move toward making a difference and do so strategically. So that also kind of came back to the theme that we had mentioned at the beginning about having a why, understanding what you're solving for, defining what the business problem is, and then starting there and focusing on it before you move on to the next. Anyway, that's just my 2 cents. So Caroline, if you had something to add before we move on and start our wrap up.
No, I think I don't really have anything to add here because I already spoke about this longly, right? Like in another slide. So I think that Diane was quite precise. Is so that you know we have to drive changes, right? Like and sometimes
Yeah.
bringing. I think that one thing that I would quote Diane is, senior management most of the time don't really know what your day-to-day activities are, right? So sometimes like they need input to understand and know what is the efficiency you need, right? So just quoting Diane on that one. No, I won't be, I don't want to be boring, so I won't talk more because I already talked a lot about this.
No, this is great stuff. This has been great.
It is, and neither of you are boring. It's going swimmingly. So again, same thing, building the culture around these endeavors so that you can accelerate operations. That is a big piece, right? Like your senior leadership knows what the end result is, but they might not have any idea unless they've lived it themselves, which perfect if they've gotten to their position and they remain cognizant and have the empathy for the people who are touching the data day to day and touching the processes day to day and what some of those pain points and friction points are for them to just kind of get the insights to their desk at the end of the day is huge. So if you're able to foster a culture where you can have those conversations between your operations folks, your middle management and your senior management, you've already solved, at least one of the big hurdles, right? So
Yeah.
that's where you ask questions like why, you show up with curiosity. You find a way to test something first, right? So identify that low-hanging fruit. Foster an environment where you can safely experiment with something to test to see if it's the right thing to hone your focus on. And then again, this is kind of like I feel like this is like a Russian doll scenario, but when you're talking about gathering data on your data projects, it is kind of important, right? So getting your own measurements and establishing the KPIs for those scenarios will help inform which ones you may want to focus on. But again, opening it back up to both of you who are absolutely not boring and filled with great insights before we close off today.
Yeah, I think my final thought here would be, again, like, don't be scared to start the journey, right? And actually, again, start with something small and take a stab at following the flow of events and trying to map out how we can make it more efficient, and it'll end up, resonating at the top of the house at some stage and be something that like will pay dividends upon for the banks.
Yeah, what I would say is uh talking about these subjects, right? Like they can seem scary, right? Or complex, right? Like when we talk about being data centric or implementing technology solutions. Uh like what am I gonna do about my core, right? Like how does this work, right? Okay, it's really easy to say, but there are many departments and we were talking about this like one slide before, right? Like there are many silos. It's hard for you to have integration between departments, right? Because for you to make this change, you need an integration. So you need like senior level involvement. Anyways, like I understand that all this may sound like a lot and it can sound complex, but sometimes if you actually like organize it as an actual like project and you implement it as Diane mentioned in steps, it's not that monster, right? It can seem a lot harder than it actually is. even though of course like there are procedures and it's not like we have to be realistic depending on what it is to be implemented, right? Like it can be something that can be time consuming, but in the end of the day, it's an investment, as we mentioned, right? Like in the future, efficiency will pay it off. And more than everything, it may seem hard because you're alone, right? It's hard to implement changes when you feel like you're alone. So I think that a really great resource also to utilize is de novo treasury, right? So de novo is in the end of the day a reference in treasury management, right? And in supporting the treasury management initiative. So a way is utilizing de novo or payment associations, right? Or consultants that you usually work with. So there are lots of resources also out there. So you're not alone in like big changes and implementation. In the end of the day, if you actually like look deeper into it, maybe it's not that big, or maybe it's not that complex. Maybe you just really didn't have the full picture of uh, what would be like the best changes, right, and how they should be implemented. So that's also what I would leave as a thought regarding the implementing changes, right?
Yes, thank you. And thank you for the plug too. But she's
Yeah.
right, whether or not you're working with a firm like ours, De Novo Treasury, your payment associations, your regional payment associations rather, are fantastic resources to go through when solving these problems. So there are certainly other ways around solving these problems if you just need an extra set of eyes on it, or you realize you might need some more education. Knowing where to go and finding those resources is also going to be key. But I think as Diane and you were speaking, the real life too long didn't read version of this entire session today, I think would be get your systems to talk and get your people to talk. So
Yeah.
you need your data and your systems to talk to each other, and you need your leadership and your people to also talk to each other to pull off these kinds
Yeah,
of larger
1,000%.
organizational changes. Yeah. So if we want to go ahead to the next slide, then Annette, we are near the end here. I think we're just going to kind of wrap a bow around it. Yep, our conclusion and key takeaways, and then we'll see if we have any questions. But again, key takeaway for me is you need your systems to talk and you need your people to talk. Diane, if you had any parting words, and Caroline, if you had any parting words, now would be the time.
I think just to add to that, I would say, embrace change, right? Change can be scary, but it can also be really fun. Most of my career, I've enjoyed when there's something that critically needs to change. So, as someone in banking, I'd say embrace it. It's going to change with or without you. So join the change.
Love that. And Caroline.
What I would say as a key takeaway is technology and data can make your life better. Believe it or not, life will be a lot easier. Your day to day will be a lot easier if you actually utilize the tools out there. So that's what I would leave us at. And also, what I've already mentioned is don't do it on your own, right? Like count with help, so you can free your mind during the process, right? Uh and not struggle into something that could be simpler if you counted on like help, right?
Yeah, absolutely. We'll love all of that input. That was a really great wrap up. So again, just to drive it home, go back to your team and start some of these assessments, especially as we head into the new year. I'm sure that a lot of these things are top of mind for most organizations, but ask your why questions. Where is your most significant data bottleneck? And then start small, aim small, miss small is one phrase that I like to always say. But identifying one or a couple of time consuming processes where your teams feel that they could absolutely be optimized and assess those to be addressed first and as candidates for improvement. And then the rest of the takeaways that we have for the folks in the audience today would be to look out for the recording of this video in your inbox after we end the call. You'll also get some goodies in our email, including a liquidity checkbox assessment tool. And again, since Caroline so thoughtfully joined us today and plugged our services, De Novo Treasury does have a partnership with JJ Fortech. So we offer services in liquidity management as well as partner with them with their liquidity dashboard tool. So if you are interested in that, in the email that you'll receive with your recording and with that little toolkit, there will be a button if you would like to set up a demo call or just a conversation with our team about some of your liquidity needs. And I don't see that we had any Q&As, so I think that this might be a good place for us to end as we are 2 minutes over. But if you had any questions that you thought of off the top of your head that might be frequently asked, we could take a minute to address those too.
Yeah, no, I think this was great. Really enjoy the partnership with JJ Fortech. They're doing great work. Excited to work together.
Yeah, on my side too. Thank you all for this webinar and for this great partnership, and excited for what's to come.
Awesome. Thank you for being with us, Caroline. And
Thank you,
that's all
Sarah.
for today. So great job, ladies. And have a great day to everyone in the audience and those who might be watching later on.